Alright, hey guys, today I want to break down my AUD NZD trade because this was a good example of why markets don't move off one data point alone. So starting with CPI, headline inflation actually came in hot, largely driven by the energy and fuel prices. So you can see here there was a monthly gain of about 32.8% surge in automotive fuel prices, largest increase since 2017. However, the more important trimmed mean inflation was actually a lot lesser. It came in softer than expected. We can see also on the year-on-year came out as 4.6%, which is lower than the forecast of 4.8% overall. So yes, on the surface, this reduces the urgency for aggressive RBA tightening, but this is where you need to go deeper because the data wasn't outright bearish. It was more of a mixed trend, right? Strong headline, slightly softer call. So CPI didn't break the AUD story. It's just softened it slightly. However, looking at the rate pricing, markets slightly reduced the probability of a near-term rate hike, but importantly, they are still pricing multiple hikes throughout the year. So the broader tightening cycle from the RBA is still intact. The rate story weakened slightly, but it didn't flip bearish. So important to take note, right? That's why we need to have a more broad view of all of the other data that drives market prices and not just your inflation rate as well. As you can see, based on the Australia 2-year to New Zealand 2-year spread or credit spread, what we can see is that we're actually having a little bit of a downtrend as compared to the AUD NZD pricing is going up, right? So a little bit of a divergence. So what's really causing this? It's really the risk sentiment of the market. So if you look closely on the right chart here, this is the S&P 500 against the AUD NZD chart. And what we can see is that we're actually seeing a very strong correlation between the risk market and AUD NZD, right? So risk price action, recent price action shows that AUD has been trading less on rate differentials and a lot more on global risk appetite overall. You know, when equities push higher, particularly say for example the S&P 500, which is the example I use, AUD tends to outperform as a growth sensitive commodity linked currency. And this was heavily driven by strong earnings, and we're actually also going to get, I believe, earnings report soon as well, mainly for tech. So even if CPI softens, right, as you can see on the left side of the chart, a strong risk environment can still push the Australian dollar higher. And as you can see here, we clearly see that AUD has a lot more bullish indicators overall, right, with stronger GDP growth, manufacturing, services PMI, retail sales, CPI, all being very bullish on the AUD. When we actually look at the comparison of the scoreboard between AUD and NZD, we can actually see that AUD is a lot stronger than NZD from technical, institutional sentiment, economic growth, and job market. Inflation is a little bit neutral, but overall, the main things that drive a currency higher is definitely between the economic and job market, as well as the other indicators like institutional, activity, etc. And what we can see is that with the edge finder score over time, we have been actually getting very bullish readings for a very long time now, right? So there's a very good chance that AUD and NZD could continue rising based on this information. And like I said, as compared to NZD, if we bring up the economic heat map here, the issue with NZD is that they're having very weak growth, higher unemployment, and inflation as well. So they're really in a position of stagflation, classic stagflation, and this is going to be a very big issue for New Zealand, for the RBA and ZEC to actually deal with this, right? So overall, strong economic growth and data overall for the Australian dollar as opposed to the New Zealand dollar. And as we take a look at the interest rate projections between AUD and NZD, we can actually see that AUD is having an increase of their interest rate as well over time. So as New Zealand. However, you can see that the interest rate on AUD is a lot higher. Now, of course, a lot of this can change over time, but so far what we can see is that both countries are looking to actually increase interest rates projections over time. But we can obviously see that when we look at the spread between the AUD and NZD interest rate, AUD definitely takes the bigger win here, right? And if we look at the COT latest report on the positioning for AUD and NZD, what we can see is that we're actually getting a relatively stable to improving AUD positioning. What we can see is that we're getting actually a bullish net position reading as compared to if we look at NZD, it's actually getting a negative net positioning reading. So what we can see here is that as of the latest report, there it has been a decrease in AUD and also a decrease in shorts for AUD, but NZD had a lot more longs kind of leaving their positions and actually had increased increase more shorts, right? So this is something to really take note that overall, we're actually still seeing a stronger AUD positioning. Yes, we actually see lesser longs coming into the market, but NZD actually had a lot more shorts coming into the market. So this is a clear divergence here. We can actually see that NZD is a lot bearish, or a lot more bearish than the Australian dollar here. So when we put everything together with CPI slightly softer but not bearish, rates are still supportive. Risk sentiment is strong. Yield spreads favor AUD. The macro overall environment is bullish for the AUD. NZD has a weaker relative economy, and positioning supports AUD upside. It becomes clear why AUD NZD continued higher, right? So this is why macroeconomics, right, and overall focusing on the fundamentals are so important when it comes to trading the markets. Truly, markets are driven by fundamentals, and at the end of the day, the technicals really just help you to enter your trade, but they don't really give you a very deep insight of why AUD has been basically running for the longest time now, right? So if we take a look at the weekly, we can actually see that AUD has been running since 2020. So something to take note on as to why current pair has been moving. And yeah, so if you guys are interested in more videos like this, let me know, and I'll be happy to share a little bit more. So I'm still currently in the trade. As you can see, it's moving up pretty nicely here. I took a scale in as well, and on both trades I'm looking to actually aim for highs right there. Now something to take note is that we're actually getting FOMC meeting and also the rate expectations as well for today, and overall the market is looking at holding rates. So I will be expecting that we will stay at 3.5 to 3.75% interest rate for the US dollar. Now I don't think much will move if that is the case. However, if it does go up or down, there could be a definite reaction for the AUD NZD. For example, if we actually see that there is a more hawkish stance for the US dollar, definitely we can see the AUD, the Australian dollar actually take a little bit of a beating. And if we actually get a dovish reading, we can actually see AUD actually start to move up as well. But ultimately, the AUD and NZD trade that I'm in right now, these are crosses, right? So I'm not really trading anything directly to the US dollar, but there can still definitely be volatility, right? Because you got to understand that US dollar is a risk off and AUD is a risk on, right? So if the US dollar is pertaining towards more risk off, which means more hawkish, right? Interest rates, then definitely risk on assets can take a beating, right? So AUD will be one of those, and the contrast would be if we're more on the risk on side, which is what we've been having for the past few weeks now, to be honest with you, then likely we're going to actually see AUD run a lot higher. So I would like to see AUD kind of move up a bit more, then I'll have a little bit more confidence in holding this position. But if we're just maintaining here until the FOMC meeting, then I'll likely probably just close the trade so that I don't just get stopped out. Anything can really happen when these types of very important events come in.